The United States just redefined what a bank is, and if you're holding stablecoins, everything just changed. In a stunning move that went largely unnoticed by the public, Congress passed the Genius Act, the government-enabled neutral infrastructure for U.S. settlements, which effectively grants federal banking privileges to regulated stablecoin issuers. This isn't just a crypto bill, it's a full financial system overhaul. For the first time in history, private companies issuing digital dollars now have the legal authority to operate as full reserve digital banks, as long as they meet one critical condition: they must issue their stablecoins on government-approved public blockchains. Let that sink in. The same dollar you've used your entire life is now being replicated, distributed, and settled on-chain with federal blessing. This is not a pilot, it's not a trial, it's not a think tank report, it's now the law. And it fundamentally alters the power dynamics of money. Here's what the Genius Act really does. It creates a new category of financial entity, the National Digital Payment Institution, or NDPI. These entities are licensed directly through the Office of the Comptroller of the Currency, and they're permitted to issue fiat-backed stablecoins, offer payment services, and settle transactions across blockchain networks, while enjoying direct access to the Federal Reserve's master account system. Translation, Circle, Paxos, and other stablecoin issuers can now plug directly into the heart of the U.S. financial system, bypassing traditional banks entirely. This is the biggest shift in monetary plumbing since SWIFT, and it's not about speculative trading. It's about infrastructure. And the silence from the mainstream media should make you pay attention. Because behind the scenes, something massive is happening. The Genius Act was quietly lobbied into existence by a strange coalition: crypto executives, fintech lobbyists, treasury officials, and a handful of lawmakers from both sides of the aisle. Its core idea is simple. If you want the US dollar to remain dominant in a digitized world, you can't leave it stuck in the 20th century. Stablecoins have already proven they can move trillions of dollars globally with near zero friction. Tether alone settled over $12 trillion in transfers in 2024, more than MasterCard. And unlike traditional banks, stablecoin issuers don't have to deal with legacy infrastructure, outdated core banking software, or multi-day settlement cycles. They're faster, cheaper, and more programmable. The Genius Act recognizes this and co-opts it. By bringing stablecoin issuance under federal regulation, the government gets three things it desperately wants: control, compliance, and continuity. Control, because stablecoins must now conform to tight risk management and KYC requirements. Compliance, because they're now embedded into the traditional financial system, subject to audits, oversight, and centralized reporting. And continuity, because instead of banning crypto, the US is now reshaping it to serve sovereign interests. Here's what it means for you. If you're using apps like Venmo, Cash App, or PayPal, you'll soon notice a shift. Under the hood, many of these platforms will begin routing payments using regulated stablecoins, not because of ideology, but because it's faster, cheaper, and legally superior under the new framework. Imagine sending money on a Saturday night instantly with zero bank fees, not through ACH or Zelle, but via tokenized dollars backed by regulated reserves and settled on a public blockchain with Federal Reserve visibility. This is where we're going, and that's not a forecast. That's now federal law, but here's where it gets more profound. Stablecoin NDPIs will not be required to fractionalize deposits. They must operate under a full reserve model, $1 in, $1 tokenized. This removes leverage and rewrites banking risk. In other words, stablecoin issuers are now the safest banks in America. And that flips everything upside down. For decades, traditional banks have relied on fractional reserve lending to generate profits. You deposit $1,000, they lend out $900. It's profitable, but fragile. One shock and the entire system wobbles. But under the Genius Act, regulated digital banks will be 100% reserved and still make money through transaction volume, payment rails, and data analytics, not leverage. This creates an entirely new breed of financial institution: fast, transparent, stable, and programmable. And the legacy banks are terrified, because if consumers can hold digital dollars that settle instantly, earn yield, and move globally, all while being insured and regulated, the appeal of legacy checking accounts evaporates. Why would anyone keep their money in a slow, fee-heavy, outdated bank when they could use a stablecoin account that does everything better? This is the quiet war playing out in Washington, and the Genius Act is the first cannon fire. But there's another layer here that few are discussing. By allowing stablecoin issuers direct Fed access, the U.S. is building a shadow version of a central bank digital currency without ever calling it that. CBDCs have been politically radioactive in America. The public doesn't want government-controlled digital wallets. Privacy concerns are enormous, but with the Genius Act, the Fed gets visibility into stablecoin flows without issuing a CBDC directly. It's a clever, powerful workaround. Now the U.S. can observe, measure, and influence digital dollar movement in real time without triggering public backlash, and it lets the market handle innovation while the state controls the rails. But here's where the real shift comes. With this law in place, the U.S. dollar becomes the first major fiat currency to go fully blockchain, native at scale. That pressures other countries to follow or risk losing financial influence. China has already rolled out its digital yuan. Europe is piloting a digital euro, but the U.S. just did something far more powerful. It turned its private sector into the launch pad for digital dollar dominance. And this has massive implications for crypto as a whole, because now stablecoins are no longer the enemy, they're the infrastructure. If that's true, the entire crypto ecosystem must adapt. Exchanges will have to support only compliant stablecoins. Wallets will need identity layers. On-chain analytics will become mandatory for every payment app. In short, the Wild West era of crypto is ending, and the era of regulated institutional-grade blockchain finance is beginning. And while that may frustrate purists, it signals something bigger: legitimacy. Because when the U.S. government grants stablecoin issuers access to the Fed, it means crypto is no longer fringe, it's foundational. This law redraws global financial power, and it's only the beginning. This shift also marks a strategic victory for the United States in the ongoing currency war. While nations like China attempt to push their digital yuan into Belt and Road partner countries, the U.S. has leapfrogged that model by enabling open market competition among regulated stablecoin issuers. This isn't just about domestic efficiency. It's about exporting the dollar in a new digital wrapper, one that's frictionless, programmable, and scalable. And it positions the U.S. dollar to dominate the next era of global settlement, just like it dominated the last. Now imagine what happens when dollar-backed stablecoins become the default rail for global trade. Not just crypto payments, but real-world commerce. Oil, commodities, supply chain finance, and remittances, all happening through a dollar token issued on-chain, backed by U.S. regulation and plugged into the federal. That's modern monetary imperialism. And here's what most people still don't understand. This isn't about the technology anymore. It's about who controls the flow of value. The Genius Act reasserts U.S. dominance using crypto rails, and that has implications for you, because the same rails being built for sovereign settlement will soon be available to retail users. You'll be able to pay your bills, collect your salary, and move your wealth on-chain, faster, cheaper, and with better compliance guarantees than any legacy bank can offer. The crypto future is no longer a niche speculation. It's becoming the foundation for everyday finance. And with that foundation comes both opportunity and responsibility. The opportunity to front-run a financial revolution, and the responsibility to understand the systems that are being built before they reshape everything you know about money. To stay ahead of these historic shifts in the future of money, consider subscribing to Wealth Signal.